Hello, today I want to talk about the Amazon of Latin America, Mercadolibre. If it could be the next stock that triples your money once the bear market passes. Mercadolibre, ticker symbol MALI on Nasdaq, operates online commercial platform in Latin America. Its various products enables businesses, merchandise, and individuals to list the merchandise and conduct sales and purchases online. The company also offers a financial technology solution platform, which facilitates transactions by allowing its users to send and receive payments electronically. In addition, the company provides a digital storefront where users can set up, manage, and promote their own digital stores. MALI was incorporated in 1999 and is based in Uruguay. It presents in 18 countries, including Argentina, Brazil, Mexico, Colombia, Chile, Venezuela, and Peru. Based on unique visitor and page view, they are market leaders in each of the major countries where they are present. Through its e-commerce platform and related services, it provides users with a robust online commercial and payments tools that contribute to the development of a large and growing e-commerce community in Latin America, a region where a population of over 650 million people and one of the fastest growing internet penetration rates in the world. Here are some bullish thoughts on MALI. It has a very impressive high growth period through 2021 and first quarter of 2022. MALI is cranking out record results. Revenue rose to $2.2 billion in latest quarter, impressive 63% in US dollar. The namesake e-commerce platform that initially put MALI on the map is still a beast. Gross merchandise volume increased 32% to $7.7 billion for the first 3 months of 2022. And the rest of its business is growing even faster. Mercado Pago, the peer-to-peer payment platform, saw its payment volume skyrocketed 81% to $25.3 billion. Yes, the payment solution that originated on its e-commerce marketplace is now generating more than 3 times the transaction take place on MercadoLibre.com. There are now 81 million active unique users across the MALI's offering, which is 15.7% more than the 70 million it was served a year earlier. This is a challenge climate, but MALI is doing the right thing by growing its reach and footprint. This is a high-quality international player with a long history of rising the bar through Latin America. Now let's look at some bear thoughts on MALI. MALI faces short-term headwinds due to inflationary environment. The biggest concern for MALI investors lies in the possibility of a decline in activity over the coming years or two, which could result in long-term damage. Like the United States, Latin America is seeing high inflation rates. In some of MALI's biggest markets, like Brazil and Mexico, inflation has surpassed 5%. Some projections even peg Latin America's inflation rate about 10% in 2023. Like what is happening in the US, high inflation on needed-to-have goods will likely surpass demands for discretionary goods sold on MALI's e-commerce platform. Additionally, rising costs could make it more expensive for MALI logistics service to deliver goods. But one can argue that many Latin American markets were inflationary hotspots before inflationary hotspots were cool. The point here is simply that this isn't MALI's first inflationary rodeo. Amazon for Latin America knows what it's going to do in time like these. Earnings have been a sore spot for MALI during the past year. The e-commerce provider has fallen short on estimates in each of the past 2 quarters. MALI most recently reported Q1 EPS of $1.3 per share, missing the $1.66 per share consensus estimate by almost 22%. When you are missing estimated earnings by that wide a margin, you're going to fight an uphill battle when it comes to the stock price. Analysts have been revising earning estimates downwards as of late. For the second quarter, estimates have been slashed by almost 5% over the past 60 days. The Q2 consensus earning estimate now stands at the $1.73 per share. These are the type of negative trends that bears like to see. The third bearish thought is from a technical perspective. MALI has been steadily falling since last year and has now established a well-defined downtrend. Notice how both the 50-day and 200-day moving average are sloping down. Shares have declined more than 56% in the past year. The stock continued to trade below average. While the 50% moving average has acted as a steady resistance throughout the downmove trends, Mali has continued to descend into the new year, with shares falling over 51% year to date and showing no signs of a reversal. The death cross, a technical pattern in which a stock's 50% moving average crossed below the long-term 200-day moving average, occurred late last year. From a financial perspective, despite the underperformance, Mali is still relatively overvalued. Its PE ratio is 98 compared to industry's 22. Price to sale is 4.16 compared to 2.19. Price to cash is 96 compared to 18 of the industry average. You can argue that this happens to the same high-growth tech companies such as Tesla and Amazon as well. Also, the company had a free cash flow of $370 million in the first quarter, which would likely worsen if profitability were to drop. If Mali become an unprofitable cash burn business, it may struggle to choose between staying operational and capture market share. If it picked the self-preservation, that could allow a rival like C Limited to gain shares in the e-commerce space. Currently, C Limited is the second largest e-commerce business in Brazil in terms of monthly active user, but that could change and leave Mali falling behind. My thoughts on Mali are, although Mali still shows impressive high growth both in fintech and e-commerce, and is a market leader in Latin America, and with the recent earning miss, the technical downtrend, and a still relatively high valuation, I would hold off buying the stock. I'm going to closely watch the company's second quarter earning to see if it can sustain the high growth momentum. Also, I want to wait for the macro environment of inflation shows signs of slowing down before I buy the stock. That's it. Thank you for watching, and I will see you next time.